afternoon, everyone. Thank you very much for your time today. I'm Jordan Trimble. I'm the President and CEO of Skyharbour Resources. So Skyharbour, for those of you unfamiliar with the company, high-grade uranium exploration, early-stage development, and prospect generation in the Athabasca Basin of northern Saskatchewan. We've been around for over a decade. This is not a Johnny-come-lately uranium story. We've been there. We've done the hard work, taken advantage of a very, very difficult uranium market for the better part of the last decade. We've built up what is now by acreage the third largest mineral tenure holding in the region, behind Cameco and Atha, 1.5 million acres of uranium claims in northern Saskatchewan across 36 unique projects. So it's one of a kind, really. It would take a very long time and a lot of money to do that if you could do that again. More importantly, though, we are about to embark on our biggest single-year drill campaign we've ever carried out as a company. We just closed a $10 million financing, basically led by a handful of strategic institutional investors and Denison Mines. That gives us the runway now for a 16 to 18,000 meter drill program across our two co-flagship Russell and Moore Lake projects. I wanted to get to this slide because I've already made some forward-looking statements. Please read this on your own time, though. So here you'll see investment highlights. As I mentioned, big property package, projects ranging from early stage, more grassroots properties, right through to more advanced stage exploration assets that either host small uranium deposits, so you have some pounds in the ground exposure, right through, and also projects that have multi-percent U3O8 in previous drilling. So high-grade multi-percent drill results, which is vital. It's very difficult finding these proverbial needles in the haystack. We have found them now. We're trying to make them bigger and more valuable. As I mentioned, 16 to 18,000 meters of drilling. Now this will be drilled across 40 to 45 drill holes, which is going to be our largest drill campaign we've ever carried out. Again, fully funded for this. You don't have to worry about equity dilution as we're funded right through this year into next year. But the other great thing here is just take a look right below that, an additional 15 to 16,000 meters of drilling as a part of our prospect generator business. We bring in partner companies, they fund the work. So you're getting 30 to 35,000 meters of combined drilling across 6 different projects, a good chunk of that being funded by partner companies. That likely places Skyharbour as the largest combined exploration program of any exploration company in the basin. So a lot to look forward to this year, fully funded, fully permitted for all of that. So I did mention the prospect generator business, just to summarize that, and there's a slide later on that I'll get to, but you have 9 partner companies now that we've signed agreements with, spending over $70 million in combined project consideration, assuming they complete their earn-ins, and a lot of them will be doing a lot of work this year. In addition to all of our drilling, our partners drilling, we're coming into a year where I believe, shocker, that we're going to see another leg up in the uranium market. We've had some consolidation, a bit of choppiness in the market. I think this year we see replacement rate contracting with utilities hit again. I think we see this market bifurcation, the geopolitics at play, really put some upward pressure on this uranium price. So we're well positioned to take advantage of that. And last but not least, we do benefit with 3 larger strategic partners. I mentioned Denison Mines. They've been our largest corporate shareholder now for the better part of the last 8 years. Their president and CEO, Dave Cates, is a director of Skyharbour. But we've also got Rio Tinto as a JV partner at our Russell Lake project. We've just completed the earn-in, 51% there, and they remain a large shareholder of Skyharbour. And we also have Urano, France's largest uranium mining nuclear fuel company, as a JV partner at our Preston project. I won't spend a ton of time on these slides. I'm happy if you want to discuss the uranium market, our team, booth 804. I'm also going to be on the uranium panel tomorrow afternoon. We'll talk more about the uranium market. But I do want to draw your attention to 2 new hires in the last few months as we continue to build out our team. We've brought in a new VP of Exploration, Sidar Donmez, who joined us after 17 years at Denison Mines, where he basically took the project. He was a senior project geologist. He was there at the discovery of Phoenix and Griffin, right through to feasibility study. Now, why is this important? Well, our two main projects are adjacent and close by to the Wheeler River project. We're exploring for similar targets, similar deposits to what Denison has at their Wheeler River project, in particular at our Russell Lake project. So to have Sidar join us full-time as a VPX, he really liked what he was seeing. We announced last year our most successful drill year, multiple high-grade intersections at both Russell and Moore Lake. So he joined us full-time as our VPX in September, a huge vote of confidence for the drilling we carried out last year and what we have going forward. And then more recently, gentleman that lives here in Vancouver, Brady Rack, joined us as our VP of Business Development. He was a top producing broker at Ventum Capital, joined us full time, which again, I think says a lot as a testament to what we're building. So a good mix of geological expertise in the Athabasca Basin, coupled with a management team, board of directors that's built and sold mining companies that can raise money and advance these projects. You'll see a couple other names here as well. Paul Matizik as a strategic advisor. He's built and sold a handful mining companies over the last 20 years. Cap structure, $204 million out. Trades around a $70 to $75 million valuation. We're one of only a few remaining advanced stage exploration companies left in the Athabasca Basin in the $50 million to $500 million valuation range. I think it positions us uniquely to explore M&A opportunities down the road. And you'll see here, well-funded, as I mentioned. We also generate cash flow from our prospect generator business, receiving about $1.5 million to $2 million a year. The financing we just closed was the first hard dollar financing we carried out in 5 years. Very few other exploration companies can boast that. We get money from these partner companies. And then notable and strategic shareholders, I mentioned Rio and Denison. We're in all of the major uranium mining ETFs and a number of larger strategic institutional shareholders, management and insiders as well. We've continued to add to our position more recently. I'll skip these slides on the uranium market. Needless to say, we're very bullish this year. This has created a good entry point as well, as we've seen a lot of the equities pull back in the recent, call it 30 to 45 day pullback, which I think provides us and investors with a great entry point to get in while we're in the middle of this upward trajectory. Now here is the main slide really in the presentation, this and the next one. So here's the portfolio of properties that we've assembled. Again, 1.5 million acres, 36 unique projects ranging from early stage to more advanced stage exploration assets. 4 of these projects in this 36 project portfolio were in a company in 2007 that was a $400 million company. So the re-rate potential for this asset base is very, very, very strong. Something to keep in mind as we work our way through this uranium market. Now here, just zooming in on our two main assets, Russell and Moore Lake. We own 51% of Russell, 100% of Moore Lake. These are advanced stage exploration projects in the heart of the Athabasca Basin, just south of the McArthur River Mine, just north of the Key Lake Mill. And we basically encircle to the north, to the east, and to the south Denison's Wheeler River project. Again, strategic partner of ours. We have a great working relationship with their team. And a lot of the targets that we're drill testing at our Russell Lake project are simply the continuation of the high-grade uraniferous conductors from Denison's Wheeler River project. It's relatively shallow drilling as well at both Russell and Moore. Our average hole depth is only about 300 to 400 meters, and it's very inexpensive drilling. Why? Road access. We have the haulage road that runs up to McArthur River, runs right through our Russell Lake project. We have an exploration camp that Rio Tinto installed there a number of years ago, which brings our cost down, and there's power lines as well. So our all-in drill cost is sub 350 Canadian, all in a meter. Most other companies in the basin are north of 500. So for every one hole that a competitor gets, we're typically getting at least a hole and a half to 2 holes. And again, relatively shallow drilling. Now, Russell Lake is a very exciting asset. We just announced the 51% earning completion. We've done a little bit of drilling there. Last year, we had a breakthrough. We announced for the first time multi-percent, up to 3%, high-grade U308 in a discovery hole, what's called the Fork Zone. We're going to be following up on that this year, as well as testing some of the other targets, again, on trend to a number of the conductors that trend from Wheeler River. Now at Moore Lake, just beside it, you'll see we have another drill campaign planned this year. Of the 18,000 meters total, about 2/3 on Russell, 1/3 on Moore. Moore Lakes had results as high as 21% U3O8 over 1.5 meters. Relatively shallow drilling. Last year we had a hole 7.3% over 3 meters, so very, very high grade, good results. And we're now looking at a resource estimate this year, as well as evaluating the potential for either ISR or SABRE to be used as one of the mining methods down the road for this project, as it's relatively shallow. So two fantastic co-flagship advanced stage exploration assets, 16,000 to 18,000 meters of drilling. And then on this slide, you'll see a snapshot of our prospect generator business, secondary part to our company, 9 partner companies spending potentially over 70 million, advancing 13 other properties. We are also anticipating at least 15,000+ meters of drilling between all of these companies, including Orano's planning a big drill program at the Preston project. So keep an eye out for lots of news flow from these partner companies, as well as cash and share payments continuing to come in from these partner companies. And then just to wrap up on the upcoming catalysts, I talked about most of them, but have it all on one slide here. So again, our largest annual drill campaign we've ever carried out, 16,000 to 18,000 meters at Russell and Moore, another 15,000 to 16,000 with the partners. Additional news flow from new option and JV agreements. We have lots of land and inventory we can option out. And last but not least, well positioned for a continued rising uranium market. Thank you.